Hi all, my name's Akil from Our Mortgage Broker. Thanks for joining me today. Today I'm joined by quite an interesting fella who I met probably about a year and a half ago at a property networking event. He's always smiling away. Look at him go. So we've been joined by Sam today. Sam is a great guy and he works for Hilltop Credit Partners. Sam, welcome to the show.
Thanks for having me, Akil.
Good. Sam, I'm not going to talk on your behalf. Tell us more about who you are, your background, and how you came into property.
Sure. So I've been in property since 2001, started out as an estate agent. I started working for free actually at the time because I was studying full time and nobody would give me a part-time job, and I really wanted to be in property. And I wrote on the bottom of my CV next to my GCSEs and A-levels that I would be working for free, PSL work for free. And finally got a job in an estate agency in Walthamstow, and very, very quickly became very good at that job and started making sales. And I was making decent money, and my father had told me to either give that money to my mum or buy a property with it. So I decided to buy a property with it, and that got me that really got me going. My dad and my mum as well are both in property as well. They've got a kind of background in it. My dad was buying 2 up, 2 downs in the northeast of England back in the 80s for £2,000, I think £3,000 to £4,000.
Yeah.
So I'd had that experience. My best friend's dad was a big property mogul in the northeast. I'm originally from Durham, that's where I grew up. And one thing led to another. Up until 2008, there was some properties that were bought and sold, hung on to a few of them, and it became a massive passion. And more recently, I've joined Hilltop Credit Partners. I head up their origination, and we are putting out development finance for SME developers across the UK.
Okay, so that's amazing. So if you didn't work for free, you probably wouldn't be where you are today. So it's good to see that you had that drive in you, right? And I think one of the guys that I watch on YouTube, a guy called Gary Vaynerchuk.
Yeah.
He always says, if you want experience in anything, go work for free, right? So you obviously picked that up very, very early doors and did that. So that's fantastic.
Credit goes to my mother. That she was the one that she was the one that told me. Because actually what happened was nobody would give me a job. And I had all these CVs, and I'd been going out to all these high streets, and I really wanted to get into property. I really wanted to become an estate agent. Since an early age, I wanted to be an estate agent. I wanted to dress up smart, I wanted to jump in the cars, go and see these houses. So I really had that passion. But I was really gutted that nobody would give me a chance. So my mum just said, "Hey, why didn't you write on the bottom?" And I'd already printed out loads and spent money on them. It was like 10 pence these internet cafes and stuff, 10 pence a copy. So she said, just write on pencil at the bottom that you'd work for free. And then suddenly I got loads and loads of offers. Yeah, I bet you did. So I just picked the biggest office that was kind of close to my house. And it was amazing. I had a really good manager there. It was all about property and sales, and he taught me how to be really good with customers and clients and buyers, and showed me the ropes. It was the start of it was, stapling property lists together. So it was before Rightmove, before Zoopla, before even computers were on the desk. We had the applicant cards. I was getting lunch for people, but slowly but surely they allowed me to answer the phones, and then they would allow me to take people out on viewings, and it just snowballed from there. And I just absolutely loved it.
That's amazing. So you built the trust up, right? So you did all the admin jobs, all the dirty, grimy stuff, but you built up the trust, right? And they bought into you, and you've excelled from there. So no, well done to you on that. I really like that.
Yeah, started from the bottom and worked my way up slowly but surely. Yeah, just hard work, really.
That's amazing. Well done. So what types of customers do you help with at Hilltops? I know you've mentioned SMEs there, but just tell us more about the types of the customers that you like to engage with and you help fund.
So Hilltop Credit Partners is a really interesting operation. It's a really interesting company with some really great people that have started it. We're actually a joint venture with a firm called Roundhill Capital. They are a private equity real estate firm, and they've partnered, the CEO there has partnered with our CEO, Paul Oberschneider, to create Hilltop Credit Partners. And we're effectively a credit bucket for alongside with Roundhill. So we've been set up really to fund SME developers across the UK. And the reason why we've done that is we found that 30 years ago, 40% of all housing was built by SME developers. And more recently, that's been reduced down to 10%. So that's a pretty significant retreat of SME developers from the marketplace. And there's a number of reasons for that, but one of the major reasons is the access to funding, especially since 2008, with Basel III and the restrictions on the banks. The big institutions have got big wads and pools of capital, but it's just not getting down to the SME business owners. So there's been a growth. I mean, you're a broker, so you know that there's many alternative lenders in the marketplace these days compared to 20 years ago. So there is choice, but still, considering the affordable housing shortage we've got, we need to be building 300,000 new homes every year. The amount of capital that needs to get injected to the system to build that level of housing is still nowhere near. So there's obviously a problem. Every good business solves a problem. And that's the problem that we're trying to solve. We provide SMEs with a pretty significant stretch of capital within the capital stack, one tranche under one set of agreements, so they don't have to go out piecing together MES, piecing together senior, piecing together third-party equity, making sure they've got their own. That whole capital stack can be quite problematic, as you well know, intercreditory agreements, different decision makers. So we just try and uniform all that under one set of under one roof, and fund very well established, good quality SME developers, helping them do larger projects, more projects, and stretching their always finite equity that little bit further.
No, that's amazing. And when we work with development lenders like yourselves at Hilltop as well, it's all about finding the right structure in place. And a lot of naturally want to borrow the maximum possible, and ultimately, rather than applying for mezzanine finance, which can be quite costly as a top up, or third party, you start creating too many people outside of the chain, and it's quite unnecessary. So it's a breath of fresh air that you guys at Hilltop have got that commercial mind. You've got one a sort of a sales deck that can cater for the entirety of that development all under one roof. So that's good to hear.
It's a one-stop funding solution is how we like to how we like to call it. We've also got something called the Equity Rolodex, which also has high net worth family offices, friends and family that want to participate in these projects alongside us. So we can provide a pretty aggressive stretch of capital. It's really, really attractive for those developers that have got a good track record with good projects. And the other reason why we've come to these conclusions of building this kind of product is because we're actually developers ourselves by background. From myself having done many flips and projects, albeit on a smaller scale compared to the level we're doing at Hilltop. Paul Oberschneider himself has built 3.5 million square foot of commercial and retail space. We went and stayed in one of his 5-star hotels that he'd built a couple of months ago. And looked at some of the apartments. Roundhill Capital themselves have got about 3.5 billion in the ground at the moment. So we understand what developers are going through at pretty much every single stage of their development journey, and we want to provide the solutions to their pain points.
No, that's amazing. So for any of those viewers that don't understand about development finance, it is quite a complex structure types of finance, right? So it's not like a traditional mortgage from for example, the likes of Santander, where it's 1.99 fixed for 5 years with a 9,995 fee. So could you just tell us, Sam, just a bit about what a structure will traditionally look like with development finance? Just high level information around loan to cost, the loan to GDV, and so on.
So where we're at in terms of our appetite is typically 75% LTGDV and up to 90% of costs LTC. Now, what we found when we were doing some analysis across the market, there's a lot of lenders out there that use the 90% LTC as a headline, but they always capping out that 65, 70% LTGDV, which means they rarely can get all the way up to that 90%. So we thought, okay, although there's a shortage of funding in the grand scheme to be able to achieve those 300,000 new units every year, there is still a fair amount of choice. And rather than going to, trying to muscle in on an established space, we as developers, we understand development. We feel a bit more comfortable going slightly higher in the capital stack and providing that extra stretch at 75% LTGDV. Now that's changed slightly to a certain extent because of the COVID-19 situation. We've had to slightly adjust on a case-by-case basis, but lenders across the platform, across the board, are doing the same thing. So, I mean, we've seen a number of them putting everything on pause, and we've been getting those inquiries coming to us now. But we've also heard of the ones that still do have an appetite and do want to lend. They've reduced their level of leverage. So they've gone from maybe where they were at 60%, they've gone down to 55%. So that's just, I think, a reaction of the market anyway, across with everybody.
Oh, that's amazing. Okay, so as I touched on, I mean, development finance is a very bespoke types of finance. It is a very competitive market out there. I can definitely vouch for Sam and his team at Hilltop. They do think outside the box. They've funded tons of deals across the country, and they have used a commercial mindset, right?
Well, we have. I correct you. We haven't actually funded tons of deals yet. We're relatively new. We've only been going for a couple of years. This has been a process so far, but we have put out a couple of good loans so far in a variety of different areas of the country. So in the Northeast, we've done a grade 2 listed 16 unit office to resi conversion. We've done a 90 unit scheme in Ashford and Kent, and we've got a great pipeline of stuff in Northwest London, 16 units. We've got 5 residential detached homes out in the kind of Cotswolds. North Devon, we've got a nice 14 unit scheme. We've just tied up another one, which is about 113 units just outside Cambridgeshire.
You play it down so well. You play it down so well. You may not have done tons of deals, but you've done some chunky stuff.
We've done some chunky stuff, and the best part about it really is that we've looked at a tons of deals, and we really pick what we would consider the really good developers on the really good projects that we can see a clear and defined exit. Our underwriting process is very good. We've got some really smart people around us, and as a team, historically, myself, Paul, Roundhill, we've all done a tons of deals in the past in some way, shape, or form. We bring vast amounts of experience at the table, so that counts for a lot.
No, that's good to see. And when I speak to my developer clients, and they're quite savvy developers, right? So as a firm, our mortgage broker, our clients vary with developers. So we might have clients that have got a residential background and buy-to-let portfolios that want to venture now into developments, or we've got quite savvy developers who've done numerous developments, right? And even for our development clients, not every deal is a deal, right? So everyone's got a different way of underwriting a deal, how they do their costs, what the GDV looks like. Every developer's got their own way of doing a cost analysis. And how they view their markets on the resale, for example. So before we provide our a deal to you, so yourselves as lenders, I always ask the client to give us more of a detailed application around how they've come up with the deal, what's their exit strategies, what's the build cost, and what comps have they used, or what comparables have they used in the market. Who are the contractors, who are the builders?
Yeah.
I don't ask those questions, I'm not going to be able to give you enough information to take the right angle or the right attitude, right?
Absolutely. The underwriting process starts with somebody like yourselves, the broker and the developer. They need to be able to bring, for us, the easier it gets is if they come with a full project memo, fully baked for us. So that includes things like who's the surrounding team, in terms of project managers, contractors. If they've got, if they're doing a fixed price contract with a JCT fixed price contract, it'd be great to see the contractor's background, the strength of their balance sheet, 3 years P&L and their track record. Yeah. In terms of their own track record as a developer, what's been their progression, what's been their last 3 deals. We need to have sight of all of that. So the earlier that comes to us, a lot of people say, how fast can we get funds out? We say 6 to 8 weeks. That's bearing in mind that we've got all of the information that we asked for on day one. Sometimes that comes in very quickly, usually from the more experienced developers, because they know the questions that are going to be asked. Yeah. Otherwise, it's kind of like, okay, they're clawing the information from here and there and everywhere, which is okay. Every business has to start somewhere. We're trying to cater towards the SME developer, but anybody that's looking at this and thinking, right, I want to get a development project application together, they need to have all of the information. And somebody like yourself, Akil, you know exactly what we're going to be asking, having done it so many times. They just need to ask you, prepare the pack, send it over. Appraisals, cash flow forecasts, these kinds of things are really, really important. GDVs, comparables, any valuation reports that they've already submitted, had from kind of Savills or whoever. These things really, really help us with our underwriting process and speed things up.
Yeah, no, I totally agree, and we've got to manage expectations here as well. And before I come to you with a proposal, I always ask my client those key questions. So as you touched on there, it's all about your experience, right, as a developer itself. Who are your JCT contractors? What market analysis have you done, and what's the exit solution? So I work on those 4 parameters, and that usually gives us a good base, as you said, a good base to come to you with a deal proposal to say, you know, I mean, this is the angle, this is the scheme, this is their experience, this are the contractors, these are the exit plans, and how you then guys can help structure that finance. So you are totally right. I guess the inception starts with us as brokers, and whether the client is an experienced developer or new to the business as a developer, it's all about working in line with one another and lining the ducks up, because ultimately you guys are keen to get the funding out ASAP, because that's how you earn your money. However, you need to have everything in place, right, before you can make that formal decision and draw down those funds from your credit lines.
Yeah, and you know, we consider ourselves much more of a funding partner as well. So the age-old dynamic of lender-borrower, we've tried to move away from. You know, Hilltop, which is a combination of kind of Paul's surname and Round Hill Capital. We're on the credit side, but we take a partnership approach, and that's how the name was formulated. And why we say we take a partnership approach is because the level of due diligence that we do on these projects, literally, we've got an investor that wants to plow more funds into us so that we can do many more deals. They've, you know, this morning complimenting us, saying, wow, you know, the VDR, the virtual data room that you sent us with your KYC CCD files, and the credit memo that you sent us is like one of the best I've seen. And this guy's been in the business nearly 12 years, working for massive banks that have, you know, got property loan books of 1.5 billion and above. So he's like, the level of detail that you guys are going into to justify this next investment is something quite impressive, and we feel very proud of being able to do that, and we're going to do that on behalf of our developers if we like the deal and if we like the developer. And if we, for whatever reason, say that this deal shouldn't go ahead for whatever, you know, whatever we pick out, the developer really needs to think twice about whether they should move forward with it. So we take that partnership approach because we want that developer to be successful, because the more successful they are, the more successful we are as we grow our businesses together.
No, I do love that. And going back to your partner concept, there is you're only going to fund a deal that you like the scheme of, you like who the developer is, and you're getting in bed with them ultimately, and you want everyone to win. So if you're not funding it, then it might not be the right deal for the developer. So that's really, really key, and I think it's a great business ethos to have there. Thanks for that, Sam. Really, really good.
Thank you.
So going forward, just sort of out of COVID-19 now, going forward, what are you guys going to be looking for as underwriters, and what are you going to be more focusing on when you underwrite these new development deals? What should developers be looking for before they bring a proposal to you? So sort of top tips, you know what I mean?
Yeah, good question. I mean, right now the reality is that if there was margins on cost, things need to just have that little bit more of a juicy margin. If something was a bit tight, maybe a month or two ago, right now it's going to be, it's going to be drowning a little bit, and we're not going to be able to touch it.
What's tight? So for those that don't know, what's a good margin to have usually?
Really good question. So typically we work on a very simple metric. It doesn't always quite work like this, but this is a good way of looking at it. If your deal that you're looking at has an unlevered, so before you put the finance cost in, because the finance cost, depending on how you structure it and your level of leverage, can affect things in different ways, but unlevered profit on cost for an 18-month project. So typically you've got a 12-month build and a 6-month sales period, 18-month loan term. You'd need a minimum of 25% on cost. If you're doing something slightly longer, like let's say 18-month build and a 6-month sale period, so 24 months in total, you'd need to have it at least 30%. Now, where we are in the cycle, and then there's other things as well. Where we are in the cycle right now, you probably want to have those slightly higher. So you've got to be negotiating harder with your vendor in most instances, with the landowner, because getting build costs down and managing sales periods right now and supply chain disruption coming from all of this is going to be tricky and uncertain. So the only way really is to squeeze that landowner a little bit more. They're going to be suffering the most from this. And we talk about property prices falling, land prices falling. It's because of things like this, because lenders, funders, investors are going to want to have that slightly juicier margin. That's the main thing, but I think there's other things as well that we're looking for. The contingency, typically contingencies of 5% on new build have been deemed acceptable, kind of industry standard. Maybe that needs to be 7.5% or 10%. We need to be able to stress test it at those levels. Does the deal still have enough profit in it if we were able to it's something that we were discussing a little bit earlier. Have you checked what happens if your build cost goes up by 10%? Have you stress tested to see what would happen if the property prices would fall by 20%? That stress testing at this stage is absolutely essential. We're going to be doing it. It'll be really good for the developers to be doing it themselves and feeling comfortable with the project before it comes to us.
No, that's great. I appreciate that. Just sort of coming out of COVID-19, we're going to have developers that can't finish off sites. You might have developers leaving projects, or you might have good investment opportunities with half-built stock, for example. Now, what's your stance on investors picking up new developments that are either halfway through the development or part completed or part not finished? So, what's your stance on finishing off a development that a client's picked up below market value, for example?
Yeah, those ones, right. So those ones are tricky. Again, we were talking about this earlier about different types of loans, whether it be residential, buy-to-lets, bridging, commercial or development. Development finance is very much case by case. We have to be able to look at all of the different elements of why this project has come to this point and either run out of cash or the contract has gone bust or the developer's gone, what's gone wrong along the way and how has it been managed up to that point. If it was, from our own appetite, I can speak of, if it was a project whereby the contractor had to be changed, it would be probably something that we're not really interested in, because we don't know who's been managing that site, how's it been built. So for somebody else to come in, they'll probably do it, but it's going to be very expensive for them to take on that risk as another contractor. So then the project needs to be able to afford it. So it's not an ideal situation. I don't want to give kind of carte blanche of what we can and can't do in those situations. Would like to see them, but it's quite obvious that it's far from ideal. But yeah, it's not a tick box exercise, that kind of thing. We really need to see, is this a developer that actually has huge cash reserves and has just been let down by a number of different things and he's been really unlucky, or is it a case of gross negligence that has got to that point? And we've got lots more uncertainty, so there's a huge kind of 6-month period of finding out stuff using QSs and is it worth our time? Basically, we have to look at that kind of thing. So it's that's a tricky one. Massively unfortunate for anybody that finds themselves in that situation. We'd like to speak to them and see what we can do.
Okay, so if anybody out there that's looking at a new development opportunity or just wants to discuss around how to structure development finance, please do contact our mortgage broker and Sam at Hilltop in particularly. We're only a phone call away, and we're happy to talk through your deal appraisals and how we can help and structure that finance for you. Sam, anything you want to leave us with before we call it over day?
No, I just where we are right now, you're calling me from your office, you're in isolation. I'm calling you from home. I think what would be good is for everybody to remain positive. I think that there's been a lot of people paying attention to the news. The news rarely has good news to share. There's a lot of people been asking, where's the market going to go? I think that if we remain positive, we've been in these kind of situations before, and overall, the world has come out in a better place than where it was. We've got great progression in this globalized economy as living standards across the board have improved. So at this moment in time, something that we've touched upon with regards to development finance: stress test your projects, remain positive, look for opportunities. Whoever's really busy in this period tends to come out the other end head and shoulders above the rest. So keep doing what you and I are doing, keep working hard, and enjoying the journey.
No, I appreciate that. Wise words. Thank you, Sam, for joining me. For all our viewers, I will leave Sam's and Hilltop's details below in the video. Sam, how can people reach you on social media handles?
Yeah, so you can find us on Hilltop. We are on Instagram, on Facebook. LinkedIn is really, really busy. But if you want to reach out to me, the best way to do it is via email. And that's Sam with 2 A's, SAAM at hilltopcreditpartners.com. And if you could leave the email address in the show notes, that'd be really grateful.
Yeah, I'll definitely do so. So if anybody wants more information about development finance, do contact us and Sam at our mortgage broker. We're only, as I said, we're only a phone call away. Development finance is a very commercial, very personal touch finance structure. It's not an off-the-shelf product. So let us know if you're looking at getting into development, or you want a comparison quote for your development. We've got access to some great lenders like Hilltop, as we've spoken to Sam from there. We're keen to work with you. We want to be your credit brokers. We want to be your credit partners. So do get in touch. Sam, thank you once again, and we look forward to seeing you again, sir.
Thanks for having me. Have a great day.
All the best.